All right, guys, today is Sunday, April 21st, and we're going to take a look at the euro. Not too much has gone on, as we'll get into in just a moment. But yeah, as you know, one of those things when you're close to your take profit, and the market decides to just, hang around close to your take profit, but it doesn't get there, the way that you expect it to, and it just becomes more of a waiting game, and then you get impatient and wanting to close the position. So pretty much I'm in that position right now, which I understand is, it takes time, it takes patience for let the market, play itself out and wait till it gets to you take profit, unless the market makes some kind of drastic change, and then you have to, you know, uh, make a call on whether to stay in the position or not. But in this case, you can see right over here, you can see and just before I keep going forward, again, if you're new to the channel, if you're looking and wondering why your candles look different than the ones that you're probably using, it's because I use the hike and the sheet candles. I won't go into that in depth right now, but if you want, you can go and look that up. Basically, it just takes the averages of the price, and that's why it looks different. And I prefer it because it has a much cleaner look. The only downside I will say is that it might be, depending on your trading style, it might be just a little delayed, right? You won't really get the picture until a candle later. I'm okay with that. Again, it doesn't matter. You can switch between candles and see what the price action is, based on the traditional candlesticks. But for me, I'm okay with that. I look at certain things that doesn't really bother me, and that's the reason why the candles look different. All right, so with that said, I'm still holding a bunch of positions. I actually added two more positions, and I'll just explain why in just a moment. But on the top right over here, you'll see all the positions that I'm holding right now. And based on all the parameters that I have, as I discussed before, I have a spreadsheet where I try to keep the numbers, have a formula where I can see, the maximum amount of size I want compared to the account size, the leverage, the risk control, all that stuff. So I don't like to have too many positions, but once I see the market going in that direction, I feel okay as long as I don't overdo it. Meaning, if for the sake of simplicity, if your initial position, well, I guess I could use an example here. Let's say you have a position up here as a standard lot, which standard lot equals $10 per pip, right? And the market moves down here. Now, you can either add another position at the equal at another standard lot or less, meaning your second position should never be more than your initial position, just in case the market pulls back or changes direction. At least you can get out around break even, and it won't be too bad. You can just get out without getting hit pretty bad. But the market moves hard, and you open up, you double your size, thinking that the market is going to continue, not pulling back. It's just going to continue in one direction. Now, if the market moves and it makes a turnaround, now your second position is going to be larger than your first, and then you are going to be, in a bit of drawdown. So just a little bit of a idea of how I work things. But yeah, so you saw my positions and everything I'm holding. Now the reason is, uh, my take profit is 1.0580, which is down here, okay, in this zone, right? So I really want to get out here. And again, I'll go into that in just a moment. But the reason why I added two more positions down here is because, let me get rid of this line. I liked the way this looked here. If I take this low, and I like the fact that price was staying below this level. You could see the wicks. You could see price is still under this trend line. And I thought we were going to continue down, which we did, but towards the middle of the day, the market started slowly pushing up, 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 and ended on a gain. Don't remember how much it was. Might have been zero point zero 0.08, nothing huge, but the fact that it's still hanging around this area, it's not really giving me an idea of what it wants to do. Now, if it does reverse a little higher, I'm still okay with my positions, as long as we stay below 1.07. I still feel okay about staying staying short all my positions without the threat of some kind of huge reversal. Maybe even 0750, even though I don't think it's going to do that, but just in case. But right now, you can see how. Let me see. Let me see if I can make this a little bit more thicker so you guys can see it a little better. Come on, let's see. All right, there you go. All right, so you got my support here, got my support here, and now this is looking like some kind of resistance area. Don't know exactly, what it's trying to do, but I would like to see, maybe a little push up and then, a fall over, and then we finally get out here down at 1.05 or sub 1.06. And that'll be the end of that trade. That would be, I don't know, a little over 1,700 pips or so combined. But yeah, so this is what I'm looking at here. There's really nothing went on. Let's see what candle it is. It's Friday, Thursday, Wednesday, um, Tuesday, and Monday. We actually had a little gap here, so it looks like it covered that gap, and it's just hanging around. Now, the reason I'm looking still down here, if I explain the last week, this whole zone is a critical support area, right? I explained this area here, this area here, this area here, and I'm expecting some kind of same, whoops, that's a little big, same kind of support somewhere around here. Okay. And I'm expecting some kind of support coming in and then us rally all the way. If we break below that, then have to reevaluate and see what the market's going to do. Not to say that I'm going to start taking positions blindly here. I do have an idea or a strategy I'm looking at, wanting to start, easing into the position. Start, like I said before, give you an example about position sizing. Start off with a lower position, and then if the market starts moving in your direction, slowly start adding. Right? You never want to just jump in and the market goes against you, and then you have a loss, and then it's a bigger loss. And it really depends on your strategy, right? But I like to try to get into precise entries, and I like to start off just for the sake of like emotional control, just to let the market show me that it wants to go in that direction. Then I'll start adding in more. So that's why I'm looking for this area here. Again, I'm waiting for a move down. I don't know what's going to happen this coming week, but I'm hoping that we push down finally and then close out, and just end this trade just to get out of the market, make the money, and then be done with it and just look for the next opportunity. Now, another thing I want to look at, if you look at the weekly chart right over here, I like the way. Let me get rid of this here. I like the way this looks in terms of the weekly chart. Now, again, these are high candle candles, so that's why it looks a little different. There is a triangle here, shape playing out. All right, let me draw that in for you guys so you get an idea. Um, say right down here. Okay, and I'll highlight with the rectangle. Say this is our area right here. This is what we're looking for. Now up top, say we're looking for something like this, right? Okay. So we have our triangle here. I think it wasn't it was a previous video or two videos ago. I was talking about potential triangle setting up here on the weekly chart, and I drew a path. Let's see if I can. Okay, here we go. So I said came up here to this median level. Up there was another short-term median level up here, and then we were going to find support, hit resistance up here, and then finally make a, you know, what is it called? Area of support, right over here, right? Kind of looks like a harmonic pattern. If I'm not too much into harmonic patterns, but this looks like one here. You see, X, A, B, C, D. And I don't know exactly what pattern this would be categorized as, but you can kind of see it for those who like to use the Fibonacci ratios and all that stuff, right? All right, so going back and removing that, yeah, I'm looking for this area of support. And if we break below this, the next target would be the next median level. And then, I mean, below that, you're talking about, almost almost at parity here. But that's way too far ahead, or we just want to first get out of this trade right here. We have some nice trades all the way from 0900s, and then we want to get out down here and see what the market's going to do here. I want to see this turn into a hidden divergence, meaning this is going to make a lower low than this previous low, and this will be kind of like an equal low to this previous low right here, and that would give me more confirmation, or at least more confidence, to want to jump in, and then essentially get on the long side with multiple positions, and then exit up here at the pivot area, which is right back to the 1.0900, which would be about 350, maybe even 400 pips, depending on entry. But again, neither here nor there. We want to see this market come down harder, and so we can evaluate, see if we're going to get some type of fluctuations down here, and then open the doors up for the bulls or buyers to go long here. So that's pretty much what I'm looking at. It's not too much action, based on, like I showed you on the daily chart. It's not really, didn't make any major moves or anything, but it is, consolidating just a little bit right down here. Now, this week, take a look. This is the previous week, but this week coming up, don't have anything too crazy. We have PMI numbers on Tuesday. There's nothing Monday. There's nothing Wednesday. Then we have advanced GDP. I expect some type of movement here on Thursday and Friday. But the following week, I mean, you can see it's jam packed, right? Again, FOMC, you know how that goes. Just really volatile, especially when Jerome Powell starts talking and market just makes some kind of wild moves, right? So this week coming up, and then the following week should be pretty. We should just get some good movement on the market and trying to get more definitive direction of what the market wants to do. All right. So with that said, that's where I'm going to leave off. We'll see what happens at the open, if we're going to get a gap, or we'll see into this week if we can finally make that push to the downside and exit all positions, and then also maybe even go up a little bit and test this previous area of support, and then make a move to the downside. All right. So that'll be it, guys. If you like the analysis, subscribe, like, and I will see you guys in the next video. Manage your trade, or I should say manage your risk, and always be patient with the trades. As you can see here, that sometimes market takes a while to move in the direction, but with patience, things work out. And just, again, manage your risk. See you guys in the next video.